Hello and welcome to another episode of the Investor Financing Podcast. And on today's show, it's going to be a really cool show. We're going to talk about CrossFit. We're going to talk about raising houses and moving houses. We're going to talk about flipping properties. And we're going to talk about the progression of real estate through multifamily and the power of multifamily and why Jason decided to move into the multifamily space, which is a common thread I've been hearing a lot on interviews lately, that it's just an easier business to grow and scale. And I want to kind of dive into the insight on this. And Jason is an active real estate syndicator and real estate investor. Jason with his wife, Pili, did I say correct, Pili?
That's correct, yeah.
Are the founding and managing members of Yarusi Holdings, a multifamily investment firm. They have acquired over 1,400 plus units, 160 million-ish type of real estate since 2016. The firm repositions properties through operational efficiencies, moderate to extensive renovations, and complete rehabbing. Welcome to the show. Thanks for joining us.
Thanks for having me, Beau. Great to be here.
Yeah, so you have a interesting background. It sounds like you were entrepreneurial to start with. You helped with your father's construction business, and you guys actually lifted houses, moved houses, and that's a very niche industry to be in. So I'm sure you got a lot of amazing experience, which probably helped your flipping business in the beginning when you got into real estate.
Yeah, it's definitely been the unparalleled road into real estate. So the construction piece that actually was spawned from a couple of different things, but after, of course, college, I moved into New York City, was doing a number of different things, from opening restaurants to running big bars to opening and sold a brewery. And Hurricane Sandy happens on the East Coast, decimated just so many houses, right? So there were so many homes in need. And my dad, for years, has run a small construction company that lifted and moved his houses. And so he'd do 12, 13 projects a year. Lo and behold, that overnight went from, a couple calls a week to just thousands of calls, right? And so the business just exploded in the type of volume it is. So my brother was working for me at the time at a restaurant bar in New York City, and my wife, and not at the time, but Pili, who we were together with at the time, we all moved to New Jersey to help Dad really just scale up and just really keep up with what was happening, right? So that was a lot of fun. We went from doing those 12 to 13 projects at one point where we did about 250, 300 in a year of actually lifting these homes. And the evolution was that we were helping homeowners get back home, eventually hopefully not flood in the future with additional flooding, and then cut down their flood insurance. So FEMA was pushing the narrative a lot, and really just the townships were requiring homes to be elevated. So still actually happening today, and happens all over the East Coast. But that was our first step. And what we were coming into in the bar world right when Hurricane Sandy happened is that, we were looking at ways of just trying to get back control of our time and our day, right? So many times in the service world or other points is that you have to do, if you don't do or show up to do, right, of course you're not making money, right? So days off, there's no just sympathy pay, right? So, and the same thing in the construction world. So it was great on that level of helping Pop, but we realized that we just wanted to find that next step in our life. And Pili was pregnant with our first kiddo. At that moment, we said, well, what else is there? And real estate was always that space of interest, but we didn't know what we didn't know. So we thought we would do what was logical. Pili, even though pregnant, went out and got a real estate license, and we started flipping and wholesaling homes. And so at the same time, we're still helping Dad, right? We're still going out there helping him, where if we had, 25 hours in a day and 8 days a week, we would have used them. And then here we are doing now flipping, wholesaling, right? So we have all these activities basically just compounding, compiling on top of each other. And it was going well, but again, we were going further away from the narrative. We knew coming in, building a small family, that we wanted to be able to spend time when we wanted. And here we are so busy that we have zero time. Right. And so what was it that would be that change? Well, we found investing out of state and investing in small rental properties, and it allowed us to really put together teams, and lo and behold, empower the teams to be able to go out there and complete the plan. And then we start making money. Money's coming in through checks in the mail, right, without us actually physically doing the work. And as soon as we saw that, it was that light bulb moment where we said, well, if we could scale this and do this in a larger capacity, well, what would happen? And that was our introduction to finding large multifamily. So we went from doing those 2 units and 3 unit properties out of state to going from a 2-3 unit to a 94 unit back in 2017. And that was that first step into buying large apartment building that led us to where we are today.
So that first big step into the multifamily, the 94 unit, was that a syndication or joint venture, or was that actually you went out and raised money? How did you kind of learn the skill sets to take that 94 unit down? Or did you do a joint venture with a Coke GP to kind of get the footing? Because it's probably a little bit more intimidating going from a 2 to 3 unit property. Now you're going into a 94 unit.
Yeah, it's that mental spot. So we did do a syndication, but we did it ourselves, right? So we were the GPs, my wife and myself. And what we did is that when we found large multifamily, we said, well, who else is doing this successfully, right? Because you start patterning success. Real estate is not a new concept. It's just the idea can sometimes be new to us just because we haven't discovered it yet. So we found other people that were doing this successfully. Some were managing their own properties, some were doing it, some were just basically buying with their own money, some were doing syndication, some were having third-party property management. So we found people that were doing this successfully and replicated their process. When you have something that's been done before and you can replicate a process, it can give you the confidence of where your guardrails to get you to the goal, right? And so that allowed us, one, and two, when you start to break it down, it really comes that mental thing, right? What's safer, a 4 unit or a 100 unit, right? And a lot of people will say, well, it's the 4 unit. Well, if you think about it, if you're 2 units vacant in a 4 unit, you're 50% occupied. If you're 2 units vacant on the 100 unit, you're 98% occupied. So from a point of a lender, what looks safer, right? The lender is also going to have more power with that because there's more downside or less downside risk on the 100 unit. Also, you can treat it like a business. So doing certain things like cutting down your utility bill or just moving the narrative, adding on extra income has a lot more to the bandwidth of what the property value is on a larger property. So the scalability of what you can do from a larger property gives you so much more flexibility. You can hire a full-time staff. All these things that you pay more for on a smaller property and you have more risk for are, I won't say washed away, but slowly eliminated the larger and larger you go.
So I know you grew up in Jersey and now I think you live in Tennessee. I'm finding a lot of people, that's a common trait. We're getting a lot of people from California that are coming here to Nevada or Arizona, or a lot of Californians are going to Tennessee too. I'm seeing that like a common thread that not just Californians, but a lot of people are moving to these states. But where's your primary focus for real estate investing? As far as your multifamily right now, where are your holdings?
Yeah, sure. So we're in 6 states right now, but our main flow is Louisville, Nashville, Atlanta, right? So if you run right down that corridor, that's our main focus. We have purchased opportunistic properties in a couple other states. So we're in Texas, even though we're selling out of that one right now, Little Rock, and up in Eastern PA.
Oh, very good. So now, I mean, now that you've tasted the bigger projects, you're not going to go back to smaller ones. You like this space. You're staying in this space for now.
You're listening to the Investor Financing Podcast. We'll be right back after this break.
Hello, Beau here, host of the Investor Financing Podcast. Are you a lender, real estate professional, or vendor that provides products or services within the real estate investing and business owner space? We are offering a few sponsorship opportunities to get in front of a highly targeted audience. If you're interested, please click the link below for further information. We look forward to talking with you. Thanks. Make it a great day. So you really focus on the 100 to 200 unit property now, or what's the kind of sweet spot?
So we found our core energy is in that 75 to 150 unit. You get to that point, whether it be 65, 85, 100 units, there's a certain threshold in markets where it makes economic sense where you can have the full-time staff. So our focus is that 75 to 150 unit. But once you find yourself in a market where you know you're going to stay and have durability, you can be really open-minded to smaller properties. And so I'll give you an instance where this happened. Actually, in our town here, we purchased a 93 unit. I've done very successful. The property manager is fantastic here. The team is great. So we came upon a 24 unit, actually walked through it randomly through a wholesaler, and it's been a crushing opportunity for us because we already had the infrastructure built out. Where if I was going to buy, let's say, a 24 unit in Henderson, where you are in Henderson, Nevada, I would be completely out of my element because I wouldn't have the economies of scale. I wouldn't have the team infrastructure. I wouldn't be able to put the best land on it. Maybe it could be a good property, but it wouldn't shine like the 24 unit we have here because we're leveraging off the power of the 93 unit that we have.
And most of your properties are market rate, meaning like just kind of workforce housing or market rate. No affordable housing in your holdings currently.
Yeah, we don't do LIHTC. It's not our business plan. There's some people to succeed with us, but it's all market rate.
And then, so like, what are your plans? You have about 100 or 1,400 units currently, right? And so some of them are going full cycle, and you're exiting out of some, and now are you actively looking right now, or where are you at in the space with just like what's going on with the economy, inflation? Sure. I know it's tougher to find deals. What's your kind of thought process going forward for the next 24 months?
Yeah, part of asset management is just constantly keeping your head on the swivel on us, how your property is performing, one, just based on the performance itself, but also the market dynamics that are the triggers pushing and pulling, right? So we've exited 6 properties in the last 2 years that we've gone full cycle on that have been shorter on the business plan than we had intended, but served based on where we were, based on valuations. It was the wish for the investors to exit at that time, right? So put us in a really good spot, had some great exits, some great wins with the investors here, but we are still actively out there looking for opportunities. So we're here in March right now. We closed on 2 in Decatur, Georgia in December, a 76 and a 90 unit, basically side by side. We closed on basically a repositioning plan of a motel into an Airbnb community in Nashville in November. We just closed on a 74 unit here in Tennessee 10 days ago, right? So we are constantly pushing forward. And the reason we're looking at this is that, you want to be buying apartment buildings when inflation's going, right? Because of course, that narrative helps you into the life where you're going. And if you look at the housing supply based on demand, we're at 0.8 weeks right now, or 0.8 of where we need for housing before supply would run out. So basically in 3 weeks, if we had nothing come on the market, right, if we just stopped that, we'd run out of houses in like 3 weeks. And that's a progressively very, very low mark. And we have this shadow supply built up here where between ages 20 to 29, right now, we have about 52% of them currently living at home. Right. And I think it was the Great Depression was 43% and World War II was 48%. So it's like 51 or 52%. So eventually they're going to move out, right? Because it's been such a hot and heavy market. We've seen such an acceleration in price points and pricing that they've been priced out. Right. But you're seeing this push back in here as it comes in the market. And we haven't met the number of units needed per year since 2007. So when you look at that and you say, OK, we haven't met any units right now between 2020 and 2030. We need really, we need about 15 million homes, and we're on course to build about 11 million. Right, so we're far behind that narrative, and it's going to be, if we keep where we're at now, we're finally starting to catch up. But it's going to be 2024 or 2025 before we actually have a surplus and of that year where more houses will be built in a year than the actual supply that we need, right? So that will be the first. So the runway says that we're going to have this continuation go. Right now, we could have different things, other factors come up that could, of course, change that. But if you're looking at what's in front of us right now, we need housing. We don't have enough, right? And so if you can come into housing and supply housing, right, then you're going to be in a good spot for you to be able to sustain and do well in this market.
Yeah, that's a very good point, that even though we've had such a good run that there's not enough inventory, and at the end of the day, it's just numbers, right? If people need housing, rents will increase and prices should increase as well. So I get that. It's just, I guess it's in uncharted times because we've never had such a bull run, right, in the history of the housing market. So it is just amazing times right now to be in real estate. It's always amazing times to be in real estate. Well, that's cool. Now, you host 2 podcasts. Will you give me a little bit of insight about the 2 podcasts you have?
Sure. So Multifamily Live, it's all about multifamily investing, really just the people understanding how to get themselves into the journey, whether it be on the active side or the passive side. And that ties into 7-figure multifamily, which are a mastermind where we help other people who are either in some form of real estate or just career find their way with buying apartment buildings so they can just change the course of the direction of their life, right? On top of that, we have Jason and Pili Project, where we talk a lot of things on that show just about self-improvement. And that's a YouTube channel.
Oh, that's cool. I'm into both of those things. So it's all about,
Nice.
and that's probably how you were able to grow so quickly, right? You're constantly improving and perfecting and researching and learning.
Yeah.
Because it's pretty amazing that you in such, in just a few short years, you were able to grow so quickly. And that's, I guess, the power of learning the business and then getting comfortable and then performing for your investors, and then more investors want to invest in your projects because you have a good track record, right? And that's just the evolution of this business. Is how challenging in your mind, what's the biggest challenge you see in like multifamily syndication? Is it raising the money or finding the deals?
They're both two sides of the coin, right? One's always more difficult than the other, right? So right now there's a lot of money out there, but leads are harder. Eventually it's going to change up where it's going to be harder or easier to get opportunities, but there'll be more fear in the market, so it'll be less money, right? So it's always a point in time when there's different stressors right now. So right now there's money everywhere. Everybody wants to put money to work, right? I think at this point there's like $15 trillion that needs to go to work, right? And at that point, where's it going to go? Right. And now the opportunities are limited. So when you look at that and say, well, opportunities are limited here. And then on that fact, where do we put that? Right. So if we can find opportunities, it's going to be easy to get money, but it's harder to get to that opportunity. Eventually, it's going to, of course, transition. It's going to be easier to get opportunities, right? Because a lot of things have changed up. However, there'll be more fear out there. There'll be other points. So people will be more apt to sit on cash than to invest right now because of the unpredictability of the market. So I'd say right now, the leads are that push part, but just creating consistent track record, that's how you can get yourself in front of more opportunities.
And what do you think, like, what do you do for personal development that really has kind of helped your business grow in the real estate? Are you a morning person? I think I heard on a podcast that you get up exactly at 4:32 in the morning. Is that true?
Yeah, that's right. So get up at 4:32 a.m. If you find that if you set a routine, it can impact everything else that goes from there, right? Create consistency in your day. It can set up so you can be ready for when things come up that are unpredictable, right? Because typically at 4:32, I set that up because when that happens, 4, 3, 2, 1, get up. Right. The concept is, let me hit that snooze button, but no one's ever slept another 5 minutes and it's just magically helped them. Right. So the second you get up, you set a narrative for your day, you create control of your day. Right. So I get up, have a glass of water, I'll meditate, I'll work out. On that fact, now I can go and spend time with the kiddos when they get up and give them their time. Right. And then my wife can have her time, go out to her and do her thing. And we get the kids out to go on with their days, right? So now everybody's had their moment to reset and be ready for what's ahead. So when something comes up that's not ideal for the day or not to plan, instead of having my whole day start with chaos where I wake up, I hit snooze button, late for work, so maybe I eat something poor, I get stuck in traffic, you fill in the blank and the day just gets away from me. So everything that comes up just seems like I'm just stacking fires. I now have controlled and created wins in my day. So when things come up from there, I can focus to just handle them accordingly and let my day continue to carry on.
That's awesome. Yeah, I'm a morning person too. And I just knock out everything in the morning.
Yeah.
I always say my goal in the day is to have completely finished all my activities by 11 o'clock. And then everything else, I'm essentially working like 2 days in every one day that the normal average person is putting in. Cause I get up at 4-ish in the morning. But maybe I'll set it for 4:32. That's kind of a cool.
There you go. Yeah.
It reminds me of that book with, I can't remember her name. 3, 2, 1, go. Anyways, she's
I know.
Yeah.
I'm blanking her name too, but yeah, she's great. Yeah.
It's a great book.
Jason, and that talks a lot about just honestly, like, you count yourself down and then is it still that bad? Right. And that's a lot of the context right there is once you do that, and most of the time we rush so much. And so everything, it's just like, if you're running on like, but like if you're taking a car to like 8,000 RPMs the entire day, of course the car, but if you just slowly step on the gas, you realize like, well, okay, maybe everything is not as bad if I just take a deep breath.
Yeah, it's so true. Where can people follow you, Jason? Where's the best place to send people if they want to know more about you and your business?
Yeah, sure, Beau. Thank you so much for having the show. Great questions here. Go over to yarusiholdings.com, YARUSI holdings.com. Find everything from there, from our podcast, our mastermind about investing with us, and just on deals we're working on.
That's awesome, Jason. You brought up a lot of great information, and I can tell you know what you're doing, and you're just dialed in and getting up at 4:32 and starting your day. Is that Monday through Sunday? Do you do that every day on the weekends too, or does it change?
Every day. You find that, some days you're waking up, you're like, it's 3:00. But in that front, you're like, do I just go back to bed or just get up? Right. And so you kind of just, your body gets in that flow.
I'm the same way. I get up. Even on the weekends, I try to sleep in, and I'm up like on occasion, I'll sleep till like 5:30, but I mean, I'm up usually by 4 and I can't change that. When I was young and single, I'd be, go out and drink. I don't drink anymore. So I have no reason to sleep in, and I'm just like 6 hours of sleep, and I'm 6 up. I know I should probably get more sleep, but they say you should get
it's what you need. You know what I mean? And like, I find in life, it's like we always are, sometimes we like look for that cheat day, but it's like, well, okay, if you're like 1 times 2 times 3 times 4 times 0, it's still 0, right? And so sometimes it's like, well, what am I cheating for? Like, if that's the ultimate pinnacle of my approach here, maybe I'm missing the whole point.
Exactly. Well, this was awesome, and continued success. I'd look forward to following you more and more and listening to more of your podcasts. It's great. You're always providing a lot of great information on your podcast. So anyways, thank you for joining us. And everybody, I hope you liked this episode. Please like and subscribe to the YouTube channel, help us grow. And Jason, you have a great weekend.
Thank you, Beau. You too.
All right.